Welcome back. You're watching Market Fatafat right here on ET Now, and now on Technicals we have Nirav Chheda joining us on the show. Very good afternoon to you, Nirav. Thank you so much for joining us on ET Now. And let's talk about the first stock, that's SJVN. How is it looking on the charts to you?
Hi everyone, thank you for having me again. This stock for the longest time was in consolidation, and just recently it has witnessed a big breakout above that 42 odd levels. Suppose that this becomes now a 4-yearly breakout from 2017. In fact, 4 yearly now. It's a big breakout. This stock can now move up towards that 55 to 60 levels in the near term, and probably double in the medium to long term period. So look to buy the stock at current levels. It's a good upside for the stock. The volumes have increased as well. So all going for the stock. Keep a stop loss of 43 for your longs, and 55 to 60 is where you book your profits from a near-term point of view in the next couple of days.
Okay, that's SJVN for y'all. But let's move on and talk about the next stock. And Ashesha, M&M is the stock that you're going to talk to us about. What is the news flow here today, and why have you picked out this one?
Well, yes, M&M is in focus on the back of operational data for the month of June, which they released yesterday post-market hours, where production has seen an uptick of nearly 16% on a year-on-year basis. Production for the month gone by stood at about 64,000 units versus 54,000 units that the company reported same time last year. Sales, meanwhile, has also seen an uptick of nearly 17%, 59,924 units in the month of June versus 51,300 units that the company reported same time last year. Exports, meanwhile, have seen a marginal dip this quarter. 2,500 units were exported this year versus 2,700 units that the company reported same time last year. But largely, volumes have seen an uptick of about 17%, and that is what the stock is reacting to, holding on with gains of 0.3%, and it has recovered sharply from the lowest point of the day.
Okay, that is M&M for y'all. Let's move on and talk about Happiest Mind, and why is this IT company in focus is that one, Happiest Mind has said that Technologies has launched its QIP. The QIP is of around 400 crores. Furthermore, what they've said that they'll allow additional 100 crores of allotment for oversubscription as well. So the total deal size is going to be of around 500 crores. The floor that is at 972 rupees a piece, which is the indicative price of a price is at 924 rupees per share. So let's keep an eye out on Happiest Minds today, not doing anything exciting, and obviously we've seen that fall coming in since the get-go, down 1% in the trade.
All right, that's Happiest Mind for you. But Harsh, Zomato, why is this one featuring on your list today?
So largely on the back of the Morgan Stanley note, Cheryl. So you are seeing positive cues coming in from that note for Zomato. What the note is suggesting is that they're expecting strong GOV growth, gross order value growth, to drive operating leverage as well as better profitability in the core business, which is the food delivery as well as the restaurant business. You're also looking at quick commerce losses that could continue to decline sequentially. So that's another positive on that profitability, on that gross profitability number on the combined business. And you're also expecting stable take rates as well as contribution margins to improve going into Q1. You're expecting overall consolidated GOV as well as adjusted revenues to grow around 10 to 11.5 odd percent in that band. So on the back of that, and this is sequentially, the 10 to 11.5% sequentially. So on the back of all of these details or all of these projections made by Morgan Stanley, you can see some positive cues coming in for Zomato, up 1% plus.
All right, that is Zomato for you. But Vinny, you also have Cartrade that has been in focus of late, isn't it?
Nirav, Cartrade on the charts, how are you looking at it? Last 6 months, 15% uptick, 15-16% gains there. At the current levels, would you still look at buying the stock?
Oh, most definitely. See, this stock in the last 5-6 weeks has seen huge buying, and by huge I mean lifetime high buying in the last 6 weeks, and the buying at the lower level, whenever a particular stock witnesses buying at a lower level, you should always look at it that smart people are buying, and probably the trend is going to change in the coming time, and that is what is going to happen here in car trade. Very likely this stock will now move up towards
I think we've actually kind of snapped that line with Nirav, but nevertheless, he is pretty much gung-ho about this particular account. And yesterday, this one was soaring in trade. But let's shift focus. Let's talk about HOEC, or Hindustan Oil Exploration Company. If you look at that stock, it saw an uptick of as much as 4%, given up all of its gain right now. And the reason why this one was gaining in the morning was because their unit had acquired balanced 50% share of Geo and Pro Petroleum, which operates Karzang oil field in Arunachal Pradesh, and the acquisition actually is HOEC's participation interest in Karzang oil field to 35%. So on back of that, you had this particular counter see a sharp uptick at open, as you can see it on your line graph, but right now it's given up all of those gains, trading flat with a negative bias.
Okay, let's move on and talk about the next one, and that is Lupin is in focus. And Lupin has actually, what we understand is they've gotten a Health Canada approval of a drug, and this drug is mainly called titropium, and this is going to be what will be helping the company in further growing their market as well, which furthermore is an Advil drug which will help them further expand their market, and that is the reason we are seeing Lupin is in focus. Also, post yesterday, just before close of market hours, also there was a news flow for Lupin, which was keeping the buzz for Lupin in trade, and that
they got the EIR for Pithampur Unit 2. Yes.
So that is the reason also there are two news flows coming in for Lupin, so keeping an eye out on Lupin today.
All right, that is Lupin for you, but let's talk about one particular counter that has been relentlessly gaining in trade, hit a record high levels, and doesn't look like it's feeling that that's enough. It's only going ahead and scaling new highs, isn't it, Nirav? Bharti Airtel 800 plus, and it is sustaining at those levels. In fact, it's building on to gains. What is the next set of target that you are envisaging for this one?
So it is likely to continue its run up. See, 850 was an important resistance which has been broken. A rounding formation breakout has come in. I believe this stock can go up towards the 925, 930 levels. So look to buy the stock at current levels with a stop loss of around 870.
Okay, let's move on and talk about Pidilite and Titan, Ashesha. Why are these two consumer names in focus today? What is the news flow around both these stocks?
Well, yes, Citi has come out with a note on these consumer stocks, Pidilite and Titan. On Pidilite, they have downgraded the stock to sell from their earlier buy rating. They've also cut their target to 2,220 rupees from their earlier target price of 2,880 rupees per share. The stock saw a sharp downtick in early morning trade. It is, of course, now recovered from the lowest point of the day. Citi says its current valuations are factoring in margin expansion benefit, and that is the reason they've downgraded the stock and have also gone ahead and cut their target price. As far as Titan is concerned over here as well, Citi has downgraded to neutral from their earlier buy stance. They maintain their target price at 3,280 rupees per share. They say they see limited upside potential for both of these counters from here on. As far as Page Industries is concerned, this too is their top sell. They say that downside risk to consensus estimates is something we could see for Page Industries in Q1. So on the back of this report that has come in from Citi, all three of these counters are in focus today.
All right, that is Titan and Pidilite for you. That is in focus also in today's trading session. Let's talk about Star Health. Why is this in the spotlight?
Well, yes. So first off, Cheryl, there's been a block deal in Star Health today. So that's a sort of a plus coming in, and you can see that the stock is gaining quite healthily in trade. So the quantum of the block deal is around 70 lakh shares, which is 1.2% of the market cap of Star Health. So a significant block deal coming in. Also, the other piece that's come through is the fact that some positivity around the fact that within the mid-cap space, Star Health is one of the stocks which have really been bought into over the last quarter by FIIs. This is a report coming in from ICICI Securities. Among the top buys and the top sells for July of 2023, we've seen Star Health come in the fourth within the mid-cap segment. So a couple of levers coming in for Star Health, but the stock up and away.
Surely keeping an eye out on Star Health, today trading with gains of almost 2.5%. Let's move on to stock number 27 and putting the spotlight on Vedanta. And Nirav, this one has been in the news in the last couple of days as well. There's a lot of news flow here. But on the charts and technically, how are you viewing this one in terms of expectations going forward? Would you say, this be a buy call or is it a sell call for you?
It's a sell call, one of my first sell calls in the last 2-3 months. Vedanta, looking at the overall chart, the chart structure is negative. Also, it is trading below 50 and 200-day moving averages. Add to that, yesterday's fall added a lot of short positions. So I believe this stock can head lower. It can come down towards the 250 to 45 odd level. So look to sell this stock for that target with a stop loss of 280.
That is Nirav's first sell call in about 3 months, and that actually goes to show how bullish Nirav has actually been on the markets, and rightly so. But let's talk about one particular counter that has been bagging a lot of orders, and today Dilip Bilcon is actually in focus, not because of the order it is bagged, but the company said it has received a provisional completion certificate for a road project in Chhattisgarh. Before the update, the stock was actually trading low by about 0.6%. Remember, the cost of the project was about 861 crore rupees, and the provisional completion certificate has been issued by the authority and declared that the project is fit for entry into the commercial operations as on June 16. This is what the company said in the exchange filing. Remember, the project included 4 lanes with paved shoulder configuration of Patrapali and Katgora Package 2 of Bilaspur and Katgora section of National Highway 1111, or which is now new National Highway of 130 in the state under Bharatmala on hybrid annuity mode. So on back of that, Dilip Bilcon is buzzing in trade. Spike when the news came out, still holding on to gains of 1%.
Absolutely, still holding on to gains of around 1%. But let's move on and talk about Cummins. Why is this one is focused? We have a note that is coming in from Kotak Institutional Equities, where they've increased the target price for the company to 2,060 rupees per share. What is actually coming in are the key highlights they are giving in from the annual report, and what they are saying is that in terms of the key business metrics, they feel like it's breaking free from the tight pre-COVID range that they'd seen the stock and the business in, and that operated in around the 20% higher power generation megawatt sales, while 25% in terms of higher exports and 50% higher business per employee also is what they're saying, and 100% higher JV PAT as well. Now, they believe that looking forward, the metrics is related to the exports, where they believe there will be an increase in the proposed quantum of the sales transactions, with Cummins UK suggesting 20% growth for the portfolio. Also, in terms of royalty, tech fees may further come down with the capital commitments, so that is something that will be supporting in terms of the improvement of capex as well. So overall, in terms of costs also, there will be some savings coming over there. So slight bit of an increase in terms of the target price for Kotak for Cummins, 2,060 rupees per share from previously 2,020 rupees per share.
All right, that is Cummins for you, and that is also among the top picks for the brokerage. But let's talk about RT Industries, Nirav, and how is this one looking on the charts? Because we know that the chemical space has been on a very weak footing. As you can see on the screen, 21% downtick for RT Industries. Do you think that this particular pressure will continue going ahead as well?
Yeah. So, one look at the chart, and there has been a linear uptrend in this particular stock. From 2000 onwards. So, somewhere down the line, there has to be a period where some cool off has to come. That is what is happening here. I believe in RT industry, near term, there can be still some downside left. The stock can come down towards 400-350 odd levels. You look to sell this stock at current levels and on some rise as well. You can keep a stop loss of around 475 for your shorts, and your particular target would be around 400 to 385.
All right, so that is RT Industries. But Piramal Pharma, Ashesha, why is this one in the spotlight today?
Yes, Nuvama has come out with an initiating coverage note on Piramal Pharma. They've given a buy rating and a target price of 130 rupees per share. The stock currently trades at 93 odd levels, and Nuvama has given a target price of 130. They say that they expect strong recovery in overall business over the coming years. As far as the reasons are concerned, they say normalization of macroeconomic headwinds, capacity expansion and cost rationalization is why they are bullish on this counter with a target price of 130. They say 1,000 crore rights issue that the company had done recently along with better cash flows are all set to de-stress the balance sheet. As far as EBITDA margins are concerned, Nuvama is saying that they expect margins to improve to 15.6% in FY24 and to 16.7% in FY25. Nuvama also believes that this counter deserves a re-rating, and that is the reason they have initiated coverage with a buy rating and a target price of 130. On the back of this note that has come in, the stock is gaining in trade today, up nearly 1.5% as we speak.
Okay, let's move on and talk about Crompton Green Consumer Electricals on the charts then. And Nirav, when you look at it in the last 2 years, this stock has just been in a consolidation phase and not done anything over there. Now, at the current price, 293 is what it is trading at. Would you say it's the right time to pick up the stock?
Yeah, definitely. I believe this stock has made a double bottom kind of a formation. Good volumes have been seen at the lower end in this particular stock, and then a breakout has come in. It has also moved above the 50-day moving average. So I believe this stock can head higher. Also, I'm seeing a lot of short covering action in the F&O space for this stock. So I believe this stock can move up towards the 335, 350 odd levels. So look to buy the stock at current levels. 275 should be a stop now.
That is CG Consumer for you, and Nirav feeling that now it's at an attractive pricing range. But Harsh, let's talk about your favorite HDFC and HDFC Bank. Very soon we'll only be talking about HDFC Bank, isn't it?
Absolutely, probably one of the last times we'll see that on our screens, both those HDFC stocks there. So, so clearly HDFC Limited will delist itself from stock exchanges tomorrow. Essentially, if you hold HDFC Limited, you will get shares of HDFC Bank over the next 1 month or so. And essentially, you get 42 shares of HDFC Bank for every 25 shares of HDFC Limited held. So say, for example, you hold 20 shares and not 25 of HDFC Limited, you get 33 shares of HDFC Bank, and the fractional shares you get in terms of cash. So HDFC Bank largely in focus because HDFC delists itself tomorrow, and HDFC Bank will continue to be the listed entity, the sole listed entity within these two companies. Of course, folding into HDFC Bank, HDFC Limited shareholders will actually hold 40+% in HDFC Bank post tomorrow, of course.
Okay, that is HDFC and HDFC Bank. Last time we'll be saying HDFC Twins now, but yes, surely keeping an eye out on
You
it.
also have HDFC Life and AMC.
Yes, but
you can still see it.
Yes, we can still say it, but let's move on and talk about the next one, and that is Piramal Enterprises on the charts, Nirav. Last 6 months, 15% return. What is the view of this one now?
See, the major returns have come in the last 3 weeks only, and the stock was going down. Lower top, lower bottom formation was taking shape from 1600 odd, which got arrested around that 700, 750 odd levels, and then a good reversal. Volumes have been seen. Also, it was moving in a channel formation, so there has been a channel breakout for this particular stock around the 800 levels. I believe this stock is headed upwards now. The long-term trend has also changed to positive. Can go up towards the 1100, 1150 odd levels from current levels. You can keep a stop loss of around 940 for your longs, and wait for that target of around 1150.
Keep an eye out on that stock, Piramal Enterprises. But let's move on and talk about Marksans Pharma. Why is Marksans Pharma in focus today? The stock price actually jumped as much as almost 10% intraday. As of now, also around those levels. And the main reason is that the company announced that they've received an US FDA approval for the new drug application, which is a pain relief drug, and that is the Advil drug that they've received. The stock is trading at a 52-week high, and the pharma company also informed the bourses that the US FDA is received this ANDA, and it's going to be in two forms, that is 250 mg as well as 125 mg as well. And these are OTC medicines which they've received the approval for. So Marksans Pharma obviously is in focus on the back of this approval that we've seen coming in from the US FDA for a pain relief medicine that is Advil medicine over there.
All right, let's move on. Let's talk about Paytm. And why is this one in focus? Because given the fact that we've entered the earnings season, a lot of brokerages have come out with their estimation for Paytm, and all of them have given a very bullish commentary on this particular counter. They are saying top brokerages are actually forecasting Paytm to post up to 59% revenue growth in Q1 on good loan disbursement numbers, and also a lot of raise the target prices as well to around 1,250 odd rupees mark. So Paytm's growth continues in cards. The UPI ecosystem disbursement trends too remain strong. If you look at ICICI Securities, they've reiterated the target of around 1,055. Axis Capital is maintaining a buy stance with the target of 1,000 rupees per share, whereas Dollar Capital also raised the target to about 1,250 rupees per share. Yes Securities, like I said, is predicting 58.5% year-on-year revenue growth from operations. Growth in revenue from operations. So yes, all of them giving thumbs up. You also have Morgan Stanley, which has a bullish call on Paytm. So yes, the stock is buzzing in trade 5% today.
Absolutely buzzing in trade 5% today. All of them have given that 1,000 plus target for Paytm.
And actually, at one point in time, you thought you will not see the 1,000 mark come in.
Not at all, like because the correction that we've seen coming in, given the concerns, but yes, about the valuation. But now seems like that thumbs up coming in from brokerage. But Nirav, you too have picked out Paytm for us. What is your target? Are you giving it a 1,000 plus target as well?
Oh, yes. So it's a good comeback for this particular company from 500 odd levels, already up about 60-70% from the lows. And I believe this stock can move up towards its all-time highs as well, which is way above the 1500 levels, but that's way in the future. I definitely believe it has the legs. To look to buy the stock at current levels. Near-term target, yes, I do believe that 1,000 is coming, and it is coming soon. So look to buy it at current levels. You can keep a stop loss of around 810, for that target of 1,000.
1,000 can come in soon for Paytm. But Nirav, I'm very amazed today because out of all the list of stocks that you have spoken about, Maruti does not feature in that list, and Maruti has finally hit that 10,000 rupees mark, the target that you had set for Maruti, but is not making onto your list. You're not seeing a further breakout on this one?
So it did not feature on my list, but to get the stock to 10,000, I had to buy a Maruti. So definitely, that 10,000 level is a very important resistance area. Once it breaks out, that is when I'll have Maruti again in my list.
Right, that's when you will have Maruti next time again onto that list. But yes, that is Maruti for you, and Nirav's take on Maruti, and he did envisage that it will hit 10,000 rupees per share, and finally it actually went ahead and did that. But next stock that we are going to talk about is banks, and primarily we will talk about Indian Bank as well as Union Bank. And why are we going to talk about both of these counters is because Investec has gone ahead and started with a buy rating on both of them. So you had at one point in time there you go, Indian Bank is still holding on to gains of 4.8%, and you have Union Bank at one point in time is trading higher than about 2.5%. What Investec is saying that they are a buy rating. This is on back of the valuation comfort that they have in both of these counters. What Investec is also saying, the tier 2 PSU banks except SBI will continue to benefit from rising interest rate cycle and higher growth and asset stability. They've also said that the valuations of PNB, Union Bank and Indian Bank are at 30% discount to the historical average multiples. Therefore, Investec is giving a thumbs up to both of them and rated a buy, and on back of that, both the stocks are buzzing in trade today.
Absolutely, but that was the last stock that we were going to talk about today. But with that, viewers, we're absolutely out of time. So thank you so much, Nirav, Harsh, as well as Ashesha and Sumit for joining in with us. And it's a goodbye from Sharon, myself, as well as the team who put this show together.